initially, if you roll the clock back a decade, we didn't have it. Every financial crisis we've had, right, in the history of the world, and we've had 10,000 of them. There have been 10,000 currency collapses, from the Lydians to the Athenians to the Spartans to the Romans to the Venetians, to the Brits multiple times, to the Carthaginians. You could just go on, and the Persians, and go on and on and on and on. And the history is full of examples of an empire rises, someone mints a currency, the successors or the children of the conqueror debase the currency, the grandchildren debase it more, the great-grandchildren forget how they actually got the power, they spend everything, go wacky crazy.
On Thursday, Bitcoin fell 7.2% in its biggest one-day drop since November 2022 when top exchange FTX collapsed. It then slipped to a two-month low of $26,172 during Asian trading hours on Friday, its lowest since June 16. Global markets have been hit by a wave of selling, with Wall Street's main indexes closing lower on Thursday and Asian shares heading for a third week of losses over concerns about China's economy and fears that U.S. interest rates would stay higher for longer given a resilient economy. Ether, the second biggest cryptocurrency, was steady at $1,685.20, having also dropped sharply on Thursday. Some analysts attributed crypto's drop to a Wall Street Journal report that Elon Musk's SpaceX sold its Bitcoin holdings after writing the value down by $373 million. Musk is influential among crypto enthusiasts, and Bitcoin prices have previously moved in response to his tweets. The SpaceX report was the immediate catalyst for Bitcoin's sell-off, said Ben Laidler, global market strategist at eToro. The broader driver is that crypto assets are not immune to the deepening risk-off selling pressure seen across all asset classes, Laidler added. Joseph Edwards, head of research at Enigma Securities, attributed the Bitcoin price move to low volatility and a lack of enthusiasm from retail investors. Michael Saylor, however, believes that dumps in markets are a normal phenomenon and Bitcoin remains the only asset worth holding on to. Let us now get into the video.
We're in the middle of chaos. There is no place to hide. Your choice is, you could buy gold, but gold is dead metal and it's just getting ground into the dirt, right? I can seize your gold. Gold is, the half-life of money in gold is 35 years. And you can't put gold on 8 billion iPhones. So the problem is there's no tech in gold, and it was a good idea in the 19th century, and it's centralized, governments can seize it, and the gold miners keep debasing it. They keep mining more gold. Right? In the best year, you get 2% more. In the worst year, someone seizes a bunch of gold, dump it on the market, you get more than 2%. So people are looking for a safe haven. What's it going to be? Property in Africa? Property in Venezuela? You can't have property in North Korea. Property in Argentina? A business? A business where? A business in Argentina where the currency collapses? What good are your cash flows if the currency that you generate the cash flows are collapses in value? So I think here's the big idea, really big idea. Everybody in the world has to decide where they're going to locate their family. They have to, physically, they have to decide where they're going to locate their themselves in cyberspace, their mind. Are you going to watch Facebook all day long? Are you going to read Twitter? Are you going to be on YouTube? You're going to go to Rumble? Are you going to look at Instagram? Right? Where is your mind? Right? And then the third question is, where is your business? Are you going to run a yoga studio in Miami? How about a yoga studio in New York? How about, are you going to run a farm in Zimbabwe, a ranch in Argentina? Are you going to buy a company that has business interest in China? How about owning a bunch of businesses in Ukraine or Russia? Right? So where is your P&L? Right? And the fourth big idea is, where is your balance sheet? Okay, you're a podcaster on YouTube. Okay, well, you better make sure that you comply with YouTube platform requirements. Otherwise, they turn off your podcast and they crimp your business. That's where you generate your revenue and you generate your cost. But now, where are you going to save your money? Are you going to save it in U.S. sovereign debt? Are you going to actually store it in gold? Are you going to buy land? Where? In California, in Ukraine, in Russia? Where? In Florida? right? Are you going to buy S&P index stocks? Are you going to buy Bitcoin? Are you going to buy art? So there were conventional answers to all these questions, Brian, and they kind of worked for, there was an answer to this question before 1914. There was an answer to this question between Bretton Woods and 1971. There was an answer to this question from 1971 till the year 2020. In 2020, it's like, oh, the answer, 60-40 bond portfolio, buy the S&P index and like a portfolio of diversified bonds and you're good. Okay, there was an answer. The answer kind of got confusing after 2020. The answer got confusing for a lot of businesses, for a lot of people. Highlight of the year? The highlight of the year is people were stunned from March of 2020 to March of 2021. And from March of 21 through the middle of 2022, they're all starting to get their bearings and they're like, well, I guess, what is Bitcoin, a digital commodity? Do I have to deal with that? Well, now Fidelity's talking about rolling out the 34 million retail accounts. You've got the government embracing crypto assets, saying we better figure it out. Congress, senators getting educated on it. The CFTC, the SEC getting educated on it. Big institutional investors starting to take Bitcoin positions. The media now you've got Bloomberg covering crypto. You've got CNBC covering crypto. You've got an entire world, media, analysts, politicians, financiers, and they're all starting to figure this out. But I still say we're early, right? This paradigm shift takes a decade. And maybe the first decade was the embers of a flame flickering from 2009 to 2020. And then from 2020, we started pouring gasoline on that flame, right? The gasoline in the US is we triple the inflation rate, monetary inflation. But forget about that. Maybe you're a blue blood living on the Upper East Side with a trust fund and you just don't see why you need it. The gasoline in Sri Lanka is everybody lost everything overnight. The gasoline in Lebanon is the bank freezes their doors and you lose all your money.
Bitcoin had been hovering close to $30,000 in recent months, having gradually recovered this year after dropping sharply in 2022 when various crypto firms collapsed, leaving investors with large losses. Crypto markets were boosted in June by BlackRock applying to launch a spot Bitcoin exchange-traded fund ETF in the United States. Some investors interpreted that move as an indication that the U.S. Securities and Exchange Commission would approve spot Bitcoin ETF applications from various asset managers, including Grayscale. Let us get back to the video as Saylor continues with his Bitcoin bullish countenance.
I realized the half-life of money, the half-life of energy or wealth stored in the currency was 36 to 48 months. So I looked at $500 million and I said, $500 million stored in US dollars at a 15 to 20% monetary inflation rate, divide 20% into 70, right? The rule is 70 and you'll hit, okay, got 3.5 years and half of it's gone. So I think I got to that point. And the significance of that for me, Brian, was I realized at that point that holding 500 million in cash at a 15% monetary inflation rate means that you lose 75 million a year on your balance sheet. And the best I could hope for is 2,000 people working themselves to death, doing 100,000 things right every year, everywhere in the world. And if we didn't screw up anything, and if everybody worked themselves to the bone, we could make 75 million.
Right.
So I had this inflection point where I realized everything we're going to do for the rest of our lives is going to be negated by the inflation on our balance sheet. And that's the point of hope, despair, and indifference, where you're like, it just doesn't matter what we do for the next decade because we can't get ahead. Now, that's a slow death, right? I've used the phrase, right? The road to serfdom is working exponentially harder for a currency growing exponentially weaker. Just a road to serfdom. That's a slow death. But if you took yourself and you dropped yourself into Venezuela or Zimbabwe, and I just told you, or Argentina, it's the same idea, but instead of a slow death, it's just a fast death, right? You might as well just open up a vein and let the blood drain out, right? It's not like giving a pint of blood a week. It's like giving a pint of blood a day, or I just open up the vein and I just bleed out, right? I mean, that's what hyperinflation is. So I would say we were jarred out of our lethargy, or jarred out of our conventional thinking because of that crisis. And then we had this couple of advantages. One, we had a huge balance sheet. And so if you were running on 500 million in debt instead of 500 million in equity, right? When you're running on 500 million of equity at 15% monetary inflation, it costs you 75 million a year. But when you're running on 500 million in debt, you're actually getting 75 million a year. So you see,
Right.
if you're an indebted company, you wouldn't be as sensitized to that. So we happen to have a lot of cash. We had positive working capital. And then we had a company with a fairly tight board, 5 people. We knew each other, and a very smart, engaged executive team and engaged board. And I'm the controlling shareholder of the company.
The U.S. Securities and Exchange Commission is poised to allow the first exchange-traded funds based on Ether futures, a major win for several firms that long have sought to offer the products. The regulator isn't likely to block the products, which would be based on futures contracts for the second largest cryptocurrency, according to people familiar with the matter. Nearly a dozen companies, including Volatility Shares, Bitwise, Roundhill, and ProShares, have filed to launch the ETF. China's Evergrande bankruptcy filing reverberates in the crypto markets, triggering significant drops in major digital assets and casting a shadow over Tether's financial backing. Once the leading property developer in China, Evergrande has recently transformed into a prominent representation of China's property crisis. On August 17, Evergrande has sought refuge from debtors by filing for Chapter 15 protection under the U.S. Bankruptcy Code. This provision assists non-U.S. companies in shielding themselves during restructuring, keeping creditors at bay. The U.S. Securities and Exchange Commission, SEC, has crossed the first step in its effort to appeal against a trial court's ruling stating that crypto firm Ripple's XRP token sale on digital asset exchanges is not a security offering. Judge Annalisa Torres has granted the securities watchdog's request to file a motion that will enable it to argue for permission to put forward an interlocutory appeal, CoinDesk reported today. An interlocutory appeal involves challenging a decision made by a lower court before the case concludes. Not all appeals are permitted, and the appealing party must demonstrate that the decision could greatly influence the case's outcome. In a ruling delivered in the middle of last month, the court concluded, in what the crypto industry considers a partial victory for Ripple, that the crypto firm's sale of XRP only violates federal securities law when sold to sophisticated investors. However, the SEC, in a recent court filing, disclosed that it was seeking permission to file a motion that will move it a step closer to getting approval to appeal the case. What does this mean for Ripple and the whole cryptocurrency space? Let us know your thoughts on this in the comment section below. Also, make sure to like, subscribe, and turn on notifications. Thanks for watching.